boy with a candy accidentally. This video is called Nerf Guns, Reliable Suppliers, Spoilage, and Scrap. So this is an article from the Wall Street Journal about Nerf gun production, how the maker of Nerf guns will navigate Trump's tariffs on China. The president-elect's potential tariffs add urgency to Hasbro, the manufacturer of Nerf guns, to find new factories for toys and games. So when you go into the article, some of Hasbro's best-selling toys could get pricier if President-elect Donald Trump implements stiff tariffs on Chinese imports. This is a very big issue because we have so many companies, US-based, that manufacture overseas. One of America's largest toy makers is negotiating with suppliers and considering design changes, another option for changing up your production ahead of new levies. The tariff is the levy. The threat of new taxes on toy imports comes amid a long-term shift in the industry away from China, spurred by rising labor costs in that country. So what is Hasbro doing? They're trying to make fewer toys in China and relocating to factories nearby in Vietnam and India. So they're still in that part of the world, but they're moving out of China. So what's the challenge if you're Hasbro and you decide to move production somewhere else? Well, it's finding reliable suppliers, and it really boils down to three things. The first is industry knowledge. Can the supplier provide raw materials that you need to other customers? Do they have experience in that industry? If you're Hasbro, do they know how to source the plastic that you need to make Nerf guns, for example? Timely delivery. Can the supplier get you what you need when you need it? If not, production could slow or stop completely. It does no good to have a supplier have great quality items if they can't get them to you on time to keep up with the production schedule. With Christmas coming up, for example, as I record this, you've got to be able to meet the fourth quarter demand for toys during the Christmas holidays. You need a timely delivery of raw materials. And finally, quality. Are the raw materials of high quality? Is there a minimum amount of material that is returned due to poor quality? Can we keep that minimized? There's an accounting impact for poor quality, and that gets to our next slide, which is spoilage and scrap. And this is taken from my book, Cost Accounting for Dummies, chapter 17 in the second edition. So let's define some terms. First of all, spoilage is a term that describes a unit you produce that don't meet your production standards, versus scrap, leftover or unused material with a low sales value. Because one of the options that you have with spoilage and scrap is to try to take that material and sell it to somebody else that may be able to use it. For example, maybe there's another company that produces using the same plastic that you use to make Nerf guns. And if you've got stuff that's left over or unusable, maybe you can sell that to somebody else who can use it to make a product or service. Then finally, third, we have reworked products, defective product that's repaired so that it does meet your production standards. So there's some defective Nerf gun products, pieces, you're able to take them off the assembly line, rework them, fix them, so you actually have a sellable product that you can sell to a customer to get cash flow in the door. Let's talk about cost allocation next, the fourth bullet point. The problem with cost of spoilage and scrap is you can't directly trace spoilage and scrap cost to a product that you sold. That would be a direct cost. Instead, you have to allocate it, which is an indirect cost. Why is that? Spoilage and scrap are not costs incurred to make a single finished unit. Just the same, you still must absorb these costs, which gets to something I say over and over and over in the book and elsewhere. You have to take all the costs you incur, direct, indirect, and assign them to a product. Every single thing you sell must absorb or have attached to it all the costs that you incur as a business, or else you can't truly measure profitability. So the last sentence, although spoilage and scrap doesn't relate directly to fixed units, they do relate indirectly. So relating it to the prior slide, if you have a reliable supplier who can supply quality items on time, understands your business, you can minimize spoilage and scrap, getting good quality products when you need them in the form that you need them. You're minimizing waste, you minimize unusable product that you produce, and you have fewer of these indirect costs that you have to assign to a product. So reliable suppliers can help you minimize spoilage and scrap. So here's the takeaway. If we have tariffs that are imposed by the government in the upcoming administration, a lot of manufacturers are going to try to shift production to various other places to minimize the impact of tariffs. And when they do, they need to find reliable suppliers who can help them minimize the impact of spoilage and scrap.